Hello, everyone. Welcome to Fundamental Auditing, Chapter 13. Chapter 13 is on the payroll and production process. So most or all companies will have a payroll process because they have to pay their employees, and then manufacturing companies would have to go through a production process. Okay, so the main risks related to the payroll relates to the ownership assertion. So this process involves cash payments to individuals, which is vulnerable to fraud. The auditor wants to make sure that the duties are well segregated. So we'll talk about that a little bit more. And then for the production process, flexibility and judgment is required for production accounting because it's kind of hard to know how much inventory to produce at a certain time because it's going to depend on what the sales forecasts are. So, in transactions include allocations from materials, overhead, labor to inventory. So, it would include work in process, finished goods, and cost of goods sold. All of the management assertions need to be considered in the production process. All right, so first we'll go through the payroll process first, and then we'll go through the production process because they are two different um, processes, so we can't really talk about them together here. Okay, so for the payroll cycle, the typical activities would include transactions that affect the wage and salary accounts. So hiring and firing, approving the time worked, for regular pay and for overtime, looking at like the amount of hours versus how much they get paid, timekeeping and cost accounting, preparing the payroll, doing payroll accounting, check preparation, and then actually the custody over the checks or the electronic fund transfers and the distribution to employees. So Exhibit 3-1 goes through the process. So I'll pull that up. So first they have to hire personnel and also fire. So they would look at like the employment application. They would give out a termination notice for anyone that is going to be fired. They'll figure out the compensation. So maybe there's a union contract or other approval to approve what the compensation is going to be. Also for any raises or anything, you'd have to determine the compensation. Deduct the employee benefits from the pay. So that should be in the personnel files of all the employees. Then do supervision, attendance, and work. So timekeeping records to make sure that they are working. Doing the payroll accounting. So the payroll register, what's the year-to-date earnings record, government reports, employee T4 forms will have to be filled out and provided to the employees and to the CRA. And then actually doing the payroll distribution, the payroll checks, or if it's like electronic fund transfer, and then actually paying out the amount. So doing the cash payment would be part of the purchases, payables, and payment cycle. So doing a cash payment and then a reconciliation to the checks and the payroll register. So the accounts that are affected in the payroll cycle would be the wages expense and accrual, payroll tax expense, pension expense, if they have a pension. So that would be usually what goes into the pension is like a percentage of a salary. Accrued employee benefits, expense and liability. So like your CPP, expense and payable, your EI, income tax, any vacation pay in there, and then the cash payments. Okay, so this would be the cycle here of all the things that are important in the payroll cycle. Okay. So when thinking about authorization, the personnel department should be independent of the other functions. So there should be a separate like HR department that deals with the hiring and firing of employees. They also should approve pay rates and deductions from employees. Direct supervisors should approve the pay, such as like the hours, the sick leave, and everything, because they're directly working with the employees. But the payroll department or personnel department should go through the process of hiring, terminating, calculating, and paying out. Okay. So custody for the payroll process includes the possession of paychecks or cash if they're giving cash to their employees, or the electronic funds transfer codes if they're giving out, like if it's direct deposit going into the employees' accounts. Other documents such as time cards or timesheets are also considered custody because that's how you determine how much is going to be paid out. And then we have the record keeping. Payroll accounting should prepare the checks and related tax reports. Personnel shouldn't have authorization nor the custody responsibility. So you shouldn't have authorization over the payroll and custody over the payroll and record keeping. And the last one is doing a periodic reconciliation. So a payroll bank account can be reconciled just like any other bank account. So there be a reconciliation in place. Look at the outstanding checks that are still to be kind of followed through into the bank statements. We'll have to look at payroll tax returns, making sure that they're reconciled properly. So the payroll systems will produce a number of reports that could be used as auditors as evidence, as audit evidence for the audit procedures. So as auditors, we can look at the personnel files. So we can look at the detailed individual employee files. This will help determine if the employees actually exist and there's no fake employees. It should probably also provide an explanation of how much they get paid. So we can compare that to how much is coming out of the account. Timekeeping records, detailed records of the hourlies, the worker's time hourly. So we can take that, total it up, multiply it with what it says is the hourly rate in the personnel files, and then make sure only those amounts are taken out. We can look at the payroll register, which contains detailed pay information. So it contains the gross pay, all the deductions that are taken out, and then the net pay. And then labor cost analysis, such as like the labor rates that I was talking about. And then the government and tax reports. So what are they reporting to the government as the T4 for each of the employees? Make sure that adds up to what they've reported for the accounting in the salary and wages expense, and also in what cash disbursements are going out. Okay. The major risks that are in the payroll cycle that an auditor needs to be aware of is there could be a payment to fictitious employees. So like a fake employee could be set up and paid, but the payment actually goes to somebody who set this up. Or overpaying for time or production. Okay, so paying for additional hours when they didn't do it, paying for overtime when they didn't do overtime, or in the incorrect accounting for the costs and expenses. So maybe the inaccurate calculation of wages, maybe the CPP was calculated wrong or something like that. There needs to be proper segregation of duties for the authorization, custody, recording, and reconciliation of the payroll functions. So custody of like the checks, the EFT codes and stuff shouldn't be with the same person who authorizes the employee's pay. So whoever is authorizing that somebody gets a pay raise shouldn't be the one that's allowed custody to prepare the payroll checks. And then record keeping should be performed by somebody who does not make authorizations or distribute pay. Okay, so all those duties should be separated so somebody can't commit fraud. Having a computer-based payroll, so the computer kind of calculates how much everyone should get paid. There might not be all the different types of records, and approval signatures may not exist. Maybe they will be embedded in a computerized payroll system. Maybe there'll be like a sign off on the computerized payroll system, maybe not. So that's something that we'll have to determine while doing an internal control questionnaire to see how what is how does pay get authorized, what's the custody like, what's the type of record keeping and reconciliation. Right. There's a lot of different off-the-shelf computer programs available to do payroll processing. The companies would rely on that to do their payroll register preparation. Also, a bunch of companies, like bigger companies, outsource their payroll function to a third party. So a company like Ceridian, for example, will do the preparation of the payroll registers. They will also pay out the money to the employees and stuff. So sometimes that gets outsourced as well. The test of controls, if doing detailed control testing, it should address all of the control objectives. However, cutoff is pretty important to the payroll cycle because we want to make sure that um, the payroll for the end of the year only includes how much should have been, or how much like the work performed of the employees. So if you look at Exhibit 13-3, it shows all like the control objectives for the payroll process. Let me just bring that up. So to make sure that payroll transactions are valid, have segregation of duties, make sure time cards are approved by the supervisor. Right? So if somebody's saying I worked these many hours this day, these many hours this day, somebody has to be overlooking that and making sure that that's correct. So the supervisor would have to approve that. Payroll files should be compared with personnel files to make sure the right pay is there. To make sure payroll records are complete, any employee complaints about paychecks are investigated and resolved. Right. So if someone's saying that they're not getting paid enough, we would want to see how they investigated that. And making sure the payroll names, rates, hours, and deductions are authorized. So like if there are any new hires, that should be, a personnel file should be started for them. If there's any terminations need to be reported immediately to the payroll personnel department, so they would stop paying them, right? Like that's one department that you want to definitely tell if you're firing someone, or if a client is firing someone, so they don't continue getting paid. All right, the pay rate is authorized by maybe a union contract or agreement, and approved by a personnel officer. Okay, so all these things should be present in order to have good controls around payroll. And then 13-6 lists typical substantive procedures to be used in the payroll process. Yeah, so let me show you that one. So the payroll expense, some of the types of procedures that can be done. You can, make sure you understand the entity, including the production volumes, the labor union agreements, what are the prior period payroll expenses, is there any industry changes or any changes in that? Payroll expenses are compared with the related accrued liabilities. So one of the big errors, I guess, that exists is that payroll or salary and wages expense accounts don't get accrued properly at year end. Maybe look at the look at the annual wage in comparison with like the average hourly rate. If you know that most employees are getting paid minimum wage, you can do like a quick calculation to see if the total salaries and wages expense for the year makes sense. Let me look up. Next page. What else can we do? We can scan the payroll journal for any like large and unusual items, right? So the payroll journal should have probably like a similar amount of pay for the employees. If it's like a salary employee, if it's an hourly employee with overtime and stuff, that might be a little bit more difficult to determine, like just kind of scanning. But maybe you'll find something unusual, or maybe you'll find through scanning the payroll journal or the payments that if payments are bi-weekly, like every Friday or every other Friday, sorry, maybe you'll look for instances where it's not paid on a Friday, and then investigate further there. Like that. You can look at the time cards, agree the hours worked to the time card to see if it matches, and then go into the payroll journal to see if it actually matches with that as well. So lots of things that can be done here for the payroll cycle. Right, back to the PowerPoint. All right, so let's look at the production process now. The production process includes transactions that flow through the business activities. So planning the production for the year, inventory planning and management, actually producing the goods and services, and then doing the accounting, cost of goods sold, right? Most of the transactions are cost accounting allocations. So if you remember from, like management accounting, cost accounting, making sure like the proper amounts are there's a proper valuation for the inventory amounts. And then exhibit 13-7 goes through the cycle. So let me show you that. Right, so first you plan your production. How much inventory do you need to manufacture? So you'd look at the sales forecast, right, compare with the last few years, figure out, okay, if last year we sold these many inventory items, so it's probably going to be about the same. Then get authorization for purchasing and inventory planning. So purchase the labor, materials, and overhead that is required. Then you would actually produce the units. So you would have to look at like the inventory. So going from raw materials to work in process, looking at the direct labor, the payroll, and paying the wages. And then if there's any orders and deliveries to customers, that's part of the revenue, receivables, and receipts process. Then actually do the cost accounting. So production cost analysis, maybe doing a periodically physical inventory count to make sure that there is enough inventory on hand, or there's enough raw materials, enough finished goods inventory to be sold. And then determine what the cost of goods sold is. Take the amount out of inventory, put it in cost of goods sold once it's sold. So the accounts that are affected would be all your inventories, so raw materials, work in process, and finished goods, cost of goods sold, and then any amortization. All right. So the authorization starts with having a sales forecast and inventory planning to create what the production order should be. So managers should approve the plans and production orders, and then the production order would be, whatever materials are needed, and then somebody has to authorize the purchase and release of those materials. Supervisors should have physical custody of the materials and the equipment and the labor while the work is performed. So they can do a requisition for materials and direct labor. Control over this type of moving inventory is pretty difficult when you compare it with, a closed warehouse of goods, where you know that if it's just sold, then it's out of there. If it's bought, that's put it in, because it has to go through 3 different inventory accounts, and work in process is especially difficult to determine, to value that. Record keeping, when production is complete, the production orders for the materials, labor records, and everything are sent to the accounting department. So you want to make sure that the cost accounting that's going on is independent from the production area. So the people that are ordering and doing the production are different from the people that are recording it, that are doing the record keeping. So material costs should come from the inventory custodian. Payroll or labor costs should come from the payroll department. So the accountant is going to determine what the labor costs are from the payroll department. And then there should be a reconciliation periodically. So a reconciliation of the physical inventory, so all three types, just from time to time, maybe monthly, to make sure what was bought is in there, if not used up already. So looking at audit evidence in the management reports. So there's a bunch of reports that the accounting systems can create. Usually it's used to supervise and control production. So auditors can use this as part of their evidence gathering. So the sales forecast provides the basis for why they've planned to create the inventory that they have. So you can look at the sales forecast and compare it to how much inventory they're making every month. The production plans and reports, again, based on the sales forecast, should match up how much it was in the forecast. The amortization schedule, a detailed schedule of depreciation on the fixed assets that are used in production. So like the machinery that's used, all the equipment that's being used. When looking at the control risk, the accounts include inventories, cost of goods sold, amortization, like we talked about. We want to make sure that there's proper segregation of duties for the authorization, so who's approving the purchases, the custody of the inventory, the recording, and the reconciliation. Okay, so somebody who has custody should not be authorizing it or accounting for it. Cost accounting should be performed by those people that don't authorize production or have custody of the production assets. And the individual who's preparing the record keeping shouldn't also be doing the periodic reconciliation. We would do like there would be control. The control should produce evidence to allow for detailed checking procedures. So there could be a complex computer system that might be used by the client to manage production and materials flow, and it going from raw materials to work in process to finished goods inventory, especially in work in process, in order to value the inventory there. So we'd have to figure that out, like what the process is, if there are complex computer systems involved, by doing an internal control questionnaire. And that will help us determine, do we need maybe a specialist to come in, if there's a complex computer system, to come in to help us audit that. Test of controls should address all of the control objectives. So looking at 13-9 has some control tests for work in process. So let me just show you that. Okay, so like vouching labor costs to labor reports, recalculating the costs that are entered, comparing what materials have been used to the bill of materials, the material requisition form, comparing the company payroll reports with the actual summary of payroll. Looking at overhead charges, so whatever overhead was charged to work in process inventory, for example, comparing that to the overhead analysis schedules, or the invoices, to determine if they're valid and accurate as well. Okay. Determining if there's a requisition available for every raw material, right? So for the raw materials that are there, was there a requisition for each one of them? Did someone do a requisition form for them, or just purchase it without doing that? You want to determine if the production order was authorized by the appropriate individual, and trace the labor hour needs to the labor reports. So these are the types of things that you would do to test to make sure that these are all present when you're doing a work in process inventory. And then Exhibit 13-12 lists typical procedures you would do for the substantive procedures. So let me just show you that one. Okay. So for the inventory production costing, you can compare the gross profit margin by product and compare it with prior periods to determine what is it that, like to determine how much should be bought this period in terms of raw materials. We could do the procedures on, we can do an inventory count of raw materials, finished goods inventory. It'd probably be hard to do a inventory count on work in process inventory, but finished goods and raw materials would be simple. We can ensure if there's any inventory costs that are in a foreign currency, make sure that they've been translated at the year-end rate. Okay. We can check the reasonableness of overhead rates used by comparing amounts applied with actual overhead and accounting records. Okay. You do need to have a really good grasp of cost accounting to be able to audit the production process. So maybe one of the auditors in the firm, so one of the team members on the audit are really good at the cost accounting piece and would do that piece. Okay, so you want to make sure you understand the whole cost accounting piece to be able to audit it. All right, so thank you for listening. That was chapter 13, and take care.